March 1 ST is closer than many people realize, and for millions of seniors across the country, that date can sound very important. The beginning of new stimulus payments is what many headlines are suggesting. But before we allow anxiety or excitement to take over, we need to pause and separate confirmed facts from speculation. When you are living on Social Security, SSI, SSDI, a pension, or carefully structured retirement savings, clarity matters more than hype. Welcome to Senior Financial Updates. My name is Benjamin, and here on Senior Financial Updates, I focus on breaking down complex federal financial topics into calm, straightforward explanations for retirees and older Americans who simply want clear answers. If you are new here, please know that this channel is not affiliated with the Social Security Administration, the Internal Revenue Service, the Department of the Treasury, or any government agency. We are an independent educational channel dedicated to helping seniors better understand how federal updates may affect their retirement income. Now let us begin with the most important question. What exactly is happening on March 1 ST? As of the most recent confirmed federal information, there is no newly approved nationwide federal stimulus payment scheduled to automatically begin for all Americans on March 1 St. That is the confirmed fact. Congress has not passed a new broad economic impact payment similar to those issued in 2020 or 2021. The Internal Revenue Service has not announced a new universal stimulus program tied to that date. So why are headlines and social media posts talking about March 1 ST? In many cases, March 1 ST is being referenced as the beginning of routine monthly benefit cycles, the start of certain state-level relief programs, or the processing period for tax refunds. For retirees, March often feels significant because it follows cost of living adjustments that took effect in January, Medicare premium updates that changed at the start of the year, and the early part of tax filing season when many refunds begin arriving. That combination can create confusion, especially when online posts loosely use the word stimulus. It is extremely important to distinguish between confirmed federal stimulus legislation and other types of payments. Confirmed stimulus payments require an act of Congress signed into law by the President. Those payments are formally announced by the IRS and the Department of the Treasury, with clear eligibility rules and distribution plans. At this time, no such new nationwide stimulus law has been enacted for March 1 ST distribution. However, there are proposals and discussions circulating. Some lawmakers have introduced ideas for additional relief payments targeted at seniors, low-income households, or families facing inflation pressures. These proposals are exactly that, proposals. They have not passed both chambers of Congress, and they have not been signed into law. It is very easy for online content to blur that distinction and present a proposal as if it were already approved. That is where unnecessary stress begins. For seniors receiving Social Security retirement benefits, supplemental security income, Social Security disability insurance, or veterans benefits, another common question arises. If a stimulus were approved, would you automatically qualify? Based on how prior stimulus programs were structured, most individuals receiving federal benefits were included automatically, provided they met income requirements. Eligibility in the past was primarily determined by adjusted gross income and tax filing status, not by whether someone received Social Security alone. Historically, full payments were issued to individuals below specific income thresholds. As income increased above those thresholds, payments were gradually reduced until they phased out completely. For married couples filing jointly, combined household income determined eligibility. That structure has been consistent across prior relief rounds. If a new federal stimulus were ever approved, it would likely follow a similar income-based formula, but until legislation is passed, no specific amounts or thresholds are official. Another concern retirees often raise is whether a stimulus payment would reduce Social Security benefits or count as taxable income. During previous stimulus programs, payments were structured as refundable tax credits paid in advance. That meant recipients did not owe federal income tax on the stimulus amount, and it did not reduce Social Security retirement benefits, SSDI, or SSI payments. It also generally did not count as income for determining eligibility for most federal assistance programs for a designated period of time. That is how prior programs operated. If new legislation were enacted in the future, official guidance would clarify whether the same protections apply. Let us also address the tax filing issue, because that is a frequent source of confusion. In earlier stimulus rounds, many seniors who did not normally file tax returns were still included automatically if they were already receiving Social Security, SSI, SSDI, or certain veterans' benefits. Federal agencies coordinated records so payments could be issued without requiring new applications in most cases. However, individuals who had recent changes in banking information, mailing address, or marital status sometimes experienced delays. That is why keeping your information current with the Social Security Administration and the IRS is always wise, regardless of stimulus discussions. March 1 ST may also feel important because it falls during peak tax refund season. For retirees who file tax returns, especially those who qualify for refundable credits, early March is often when direct deposits begin appearing in bank accounts. Tax refunds are not stimulus payments. They are refunds of overpaid taxes or credits claimed on your return. The IRS processes refunds in phases, and direct deposit is typically the fastest method. Paper checks can take longer due to mailing times. There are also state-level programs that sometimes begin distribution around late February or early March. Certain states periodically issue property tax rebates, energy assistance payments, or inflation relief checks funded at the state level. These are not federal stimulus payments, and eligibility varies by state. If you hear about a March payment, it is important to confirm whether it is federal legislation or a state-administered program specific to your location. Now let us talk about scams, because whenever the word stimulus begins circulating again, fraud attempts increase. Scammers rely on urgency and confusion. You may receive a phone call claiming your March 1 ST stimulus is on hold until you verify your Social Security number. You might receive a text message with a link asking you to confirm bank details to release your payment. These are red flags. The IRS and Social Security Administration do not call, text, or email asking for full Social Security numbers, banking passwords, or payment in exchange for releasing funds. Legitimate payments are issued automatically based on official records. If Congress were to approve a new stimulus in the future, you would see formal announcements on official government websites and credible national news outlets. There would be clear documentation, published eligibility rules, and structured timelines. There would not be secret links sent through text messages or fees required to unlock your money. For now, the confirmed reality is that Social Security benefits continue on their regular monthly schedule. Cost of living adjustments that were announced for the year are already built into monthly payments. Medicare Part B premiums for the year have already been set, and any adjustments are reflected in net benefit amounts. Those are ongoing, structured programs. They are not one-time stimulus payments tied to March 1 Saint. It is completely understandable to hope for additional relief. Inflation has affected grocery bills, utilities, insurance premiums, and medical expenses. Many retirees feel that fixed incomes are being stretched thin. But hope must be balanced with accurate information. At this moment, there is no officially approved new federal stimulus payment scheduled to begin universally on March 1 Saint. If that changes, we will carefully review the confirmed legislation here on Senior Financial Updates and walk through eligibility, payment timing, tax implications, and how it interacts with Social Security and retirement income. Until then, the best step you can take is to rely on verified sources, avoid sharing unconfirmed posts, and protect your personal information. As we close, let me gently summarize. March 1 ST is not the launch date of a newly approved nationwide federal stimulus payment. No new law has been enacted authorizing broad direct payments to all Social Security recipients or retirees as of now. Proposals exist, discussions continue, and economic debates are ongoing, but proposals are not the same as past legislation. If future relief is officially approved, it will be publicly documented and clearly explained. Thank you for spending this time with me today. My goal on Senior Financial Updates is always to provide steady, trustworthy guidance so you can make financial decisions with confidence rather than confusion. If you found this explanation helpful, consider subscribing to Senior Financial Updates so you can stay informed as soon as verified changes occur. Staying calm, informed, and cautious is one of the strongest financial tools you have in retirement. I look forward to speaking with you again very soon.